Good morning. Welcome to Stock Market Today. It's Tuesday, October 6th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. It also gives you daily stock ideas to consider, do further research. Hits your inbox every trading day before the market opens. So U.S. equities notably higher in Monday's trading. The improvement in President Trump's health, along with the prospect of fiscal stimulus, led to the rally in risk assets. Treasuries were weaker, with the curve steepening. The dollar outperformed the yen, but lagged on the euro cross. Gold finished up 70 basis points following a 2% gain last week. WTI crude added nearly 6% yesterday after losing 8% the previous week, and that helped energy be the best performing sector on the day, followed by tech and healthcare. Underperformers, REITs, staples, and Utes, all sectors higher on the day. As we get to the desk this morning, futures are down 20 basis points after Asian markets were higher overnight. Taiwan, Hong Kong, and Japan led the charge. China closed for a holiday. European markets are mostly lower. Treasuries are unchanged, slightly stronger at the back end. After yield saw some really good upward pressure, I guess, or really bad if you own the funds, upward pressure yesterday, hitting their highest level since June. Dollar lagging the yen while trading stronger against the euro. Gold is off 10 basis points. Crude oil is up 1.2%. To kick us off on a Tuesday morning where we have the SPY closing in on a near-term breakout level, $343. That's kind of this interim high here. So if we're just kind of thinking of a playbook, if we're thinking of a roadmap or a framework for the market, how do you square it up? What's your thought process right now? You have support at 320, so you know if we're oversold near 320, that's a high probability entry point with a clearly defined risk metric at 320, right? You break 320, you got to start managing your risk. Flip side, for those who play momentum, more type of breakout situations, 343 on the SPY is also the situation where you want to become more aggressive. All right, so if we think about using SPY as a trigger, and then where do we want to be in equities? We want to be in the outperformance, but let's use SPY as a trigger for how aggressive to be. 320 and oversold, let's get aggressive in the leading sectors, leading industry groups. 343 and over 343 and going with Mo, let's get aggressive, leading sectors, leading industry groups. Now, right now, what's interesting to me, and we'll talk about this a little bit, is the leading growth areas like comm services, tech, discretionary, by our measurement of overbought, oversold, or overbought. But what's interesting is our favorite cyclical areas like materials and industrials are at or near oversold levels. So you can see our favorite groups borne out by our ETF ratings at the sector level, comm services, tech, discretionary, materials, industrials, are ebbing and flowing at different times, right? So the tech, comm service, discretionary, traditional growth is now overbought. Our favorite cyclicals are now oversold. So you can see the dynamic playing out. It's outstanding, actually. QQQ outperforms on the day, but growth theme is overbought, as I said, in the near term. And yesterday we said, IWM, hey, you're invited to the party. Well, they RSVP'd. And they led the pack on the day, and we would love to see IWM take out 160. In particular, so an ideal situation here is SPY going through 343, Q's going through 280, IWM going through 160, markets in gear with each other. From there, right, the next level of analysis is simple. What's outperforming? So let's take it from there. Let's talk about our market in a minute. What are we writing about today in our note? Well, we had a big rally to start the week with growth themes now overbought. So our focus turns to our favorite cyclicals. Long bonds hit hard. So it's kind of interesting. With growth overbought and yields rising, you probably don't want to chase growth right now. We still like it. That's not, hey, Dan is now bearish on growth. That's not the takeaway. All right. Understand the nuance in the arguments. I think it's important. I can be less bullish on something and not be bearish. So right now in the near term, I'm less bullish on growth. I think there's better opportunities in our favorite cyclical areas of the market, especially with long bonds getting hit, yields move higher. Just think about time value of money and what a growth stock is and what happens if rates go up. I think I think it's a function of stimulus, right? Vice President Biden opening up a wider lead in the polls and more importantly in the betting markets opens the door for further and bigger stimulus. That's inflationary. For those of you who have been listening to me since basically June, you should by now fully understand my stagflation view. Okay, I'm not going to go through it here, but let's just say it's playing out. I think there is a possible bottoming in the relative trend for financials that coincides with a steepening yield curve. And as I said, futures point to a lower open here today. Let's look at the industries from a power bar perspective. We were strong across the board yesterday. Dow up 1.7, 4 to 6 bulls to bears. S&P up 1.8, 123.69 bulls to bears. NASDAQ outperforms, up 2.13%, 27 to 7. And small caps, as I said, lead the charge. They RSVP'd. Yes, we'll be there. We will be at Monday's party. 694 to 280 bulls to bears. Bonds down tick, sending yields higher. Energy, your leading group. And what's kind of becoming clear to me is small caps like Biden, right? Increased spending. Okay. Increased spending here at home. It's somewhat of a cyclical play. Small caps like Joe Biden. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Stocks of the day, right? Sticking with this theme of providing you with some thoughts and ideas in and around screens as it relates to key themes. So what did I say earlier? I said our favored growth themes are overbought. So let's go check out our favored cyclical themes. I just did a pretty simple screen here. I screened XLB and XLI, right? So those two sectors as a starting universe for stocks that are very bullish or bullish and are currently oversold, okay? I didn't look at relative strength. I didn't look at money flow or anything else. Just look for the names that are oversold. You should recognize this name from yesterday. Longtime readers of my work know that I own Mosaic and have written about it. I own LyondellBasell. Here's Freeport, right? So the names you know, right? This is a good starting point to dig in, do some more work. GE, whatever. But here are 13 names for you to do more work on. Drop them in. Do they fit your setup? If they don't, then you don't have to do anything. But if they do, great. Otherwise, stick them on a watch list. Maybe they start to play out for you and your style. But I just think it's interesting, this dynamic that's played out, the ebb and flow, right? 2 weeks ago, actually 2 weeks ago today, we said, let's start adding exposure to quality growth themes, right? Boom. 2 weeks later, our quality growth themes are overbought. Great. Let's look back now at our favorite cyclical themes. Let's look at our sector tracker now, moving to the last 5 days. Utes and REITs and fins at the top of the list. That's kind of fascinating, right? So let's kind of unbutton that for a little bit, because Utes and REITs are defensive, right? They're yield sensitive. Financials are yield sensitive as well, but these two tend to move in different directions, right? Higher rates, better for fins, but worse for Utes. What I think is playing out here is you have curve steepening, right? So that's helping the banks. But with rates so low, and a drumbeat, whether you believe it or not, that the 60-40 portfolio is dead and that you're not going to get the type of return and or diversification you need in that portfolio. I'm not saying I agree with it. I haven't done the work. I think what you're seeing is a reach for yield into the equity market, right? So somebody who doesn't want to own 30-year bonds at 1.3, 1.4% might look at REITs and utilities and the yield there. So that's what I think is playing out. Healthcare, discretionary materials, and industrials, middle of the pack. Staples, comms, tech, and energy, bottom, right? These are our overbought groups. These are our groups that we want to look at. Energy, I mean, I kind of feel bad kicking it while it's down, but it's just so fun to do. It's going to turn one day, maybe, but today's not the day, probably. And that trend is awful. And I'm happy to miss the early stages of it, and that's fine. Let's look at healthcare services as our industry in focus today. Past 6 months, been an outperformer, nearly 8%. 19 to 3 gives it a very strong power bar ratio. Number 6 of 21 subsectors, having moved down 2 slots over the past week. Owens & Minor, Universal Health, and the Providence Services are very bullish stocks that warrant some consideration, some extra work here, for really a great-looking chart. Just a great-looking chart. On the verge of a breakout, eyes for the highs, as I like to say. We have a bullish rating, 19 to 3, strong trend above the rising long-term trend line. Outperforming, intensity of outperformance picking up. Only real knock here is that we're overbought in the near term, but you got breakout potential here at $80 on XHS. Okay, the fund is overbought, but let's take a look. 19 names to look at. And what's interesting is if you read my note today, we're not high on healthcare as a sector. But as I've always said, healthcare is one of those sectors where you need to do extra work, right? There's a difference between a pharma stock and a med tech stock, a biotech and a services stock, right? Do the work. Life science tools is different from, pharma, okay? You got to drill down, do the work, take a look at where the relative strength is, because there are opportunities in healthcare. They're just not in the pharma space. Biotech's volatile. There's opportunities. Think more towards the tech side of things. Trending names now, Regeneron gets a bump as Trump is taking their cocktail. URI, that's a Biden play as far as I'm concerned, right? Cyclical growth, spending, right? All of the things that kind of line up, stimulus with the Joe Biden presidency. Oxy is selling some assets. That stock higher by 6.5%. CMA, no real news there. Barron's article on Albemarle, ALB, as a lithium play, sent that stock higher by 6%. Loser side of the board, DR Horton, one of the hot home builders. Rates go up, builders go down, at least in the near term. Domino's, no real news there, DPZ. They do report this week. Schwab, not sure why this was down 2%. They are closing their deal with TD Ameritrade. Norwegian Cruise Line, NCLH, suspensions extended. Carnival goes along for the ride to the downside. Those stocks down 1.6 and 1.3% respectively. Let's dig in now. I said I was going to talk about materials, so here you go. Going to look at it a little bit of a different view here today. But XLB, obviously, it has a bullish rating in our model. Let's look at the 50-day moving average rising and acting as support. We're above a flat 200-day. I don't love flat 200 days, but that's what we have. What I like is the shift in the RSI into a bullish regime. Bearish. Can't become overbought. Easily becomes oversold, and then we shift. Oh, look at that. Pullbacks can't take the RSI below 50. We become overbought. Pullbacks to the 50 level. Can't become oversold. Can't become oversold. Right? Up here, can't become overbought. Down here, can't become oversold. That's indicative of a strong trend. Look at the scooter score, 83.2, coming off here a bit, but I think it looks interesting. You want to be doing work in the materials space. I know I've done work in the materials space. I own Mosaic, I own Lyondell, Basel, OYB. Those are names that fit my criteria. So I've bought them. The growth themes are overbought. In our model, our overbought, oversold indicator, XLB, is oversold. Now, long bonds fall. This is interesting. We can get into the whys and whatnots, but the why is, in my mind, simple: inflation, right? As the betting odds give a wider spread to a Joe Biden victory, the stimulus comes to the forefront of the market. So in my mind, stimulus has always been not an if, but a when and how big. I think if we get something before the election, that's a positive surprise for equities. But realistically, within the next 6 months, we're going to likely see some form of stimulus. And the spending bills that a Joe Biden presidency bring, right? That is inflationary. Now, I've said repeatedly in my work that I think one of the best plays and one of the closet plays on this inflation is in the ags. But regardless, what's happening here to the long bond is people are starting pricing inflation. Now it's come under pressure, but it's at the long end, which has caused the curve to steepen, which all of a sudden makes this look somewhat interesting. Potential bottoming process in financials relative to SPY, with RSI making higher highs, right? As the banks stabilize. This is something we want to watch closely in conjunction with the yield curve. That'll wrap us for today. Take us for a test drive, chaikinanalytics.com/test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.